You're watching Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. First trading day of 2024 kicks off with major markets in the green and the NGX All-Share Index near the 75K level. The Nigerian Investment Promotion Commission has granted 34 companies 3-year tax exemption in 2024. We'll discuss expected impact as Senate approves securitization of outstanding 7.3 trillion naira Ways and Means. Hello and welcome to the program. I'm Ladi Williams. Let's get a sense of how major markets are kicking off the first trading day of 2023 and the top stories that set your agenda. Well, the Federal Ministry of Agriculture has commenced the 2023 dry season farming to boost production and enhance national food security. Unveiling the irrigation scheme in Gashua, Yobe State, the Minister of Agriculture and Food Security, Mr. Abubakar Kyari, says the project targets 200,000, about 200,000 hectares of arable land, which is projected to produce 1.25 million tons of wheat. Mr. Kyari adds that the farm inputs have been delivered for distribution to farmers in the state, and each of them will receive 7 bags of NPK and liquid fertilizers, 2 bags of improved wheat seeds, and litters of pesticides, depending on the size of arable land to be irrigated to produce wheat. The Nigerian Investment Promotion Commission has granted 34 companies 3 years tax exemption, that's for 2023, to promote investment and drive economic growth and development. According to the head of Incentives Administration, NIPC, Mr. Kaide, the Pioneer Status Incentive is a tax holiday that grants qualifying industries and products relief from payment of corporate income tax and for an initial period of 3 years, extendable for 1 or 2 additional years. Mrs. Kaide notes that the tax incentives, which had been a contentious issue due to the high amount of revenue lost to waivers granted every year, were meant to boost foreign investment into the country. All right, let's get a check on the oil market now. See, oil prices rose today as Iran dispatched a warship to the Red Sea. The situation remains tense in a critical waterway for global shipments. Has seen vessels attacked by Yemen's Houthi rebels. Global crude benchmark jumped about 1.6% to $78.27 a barrel, while the U.S. WTI rose by 1.42% to $72.67 a barrel during early Asia trade. Iran announced it sent the Alborz destroyer through the strategic Bab al-Mandez Strait without elaborating on details of the warship's mission. It added that the operations are periodically conducted in the Red Sea to secure shipping routes. The move comes after the U.S. Navy destroyed 3 boats of Iran-backed Houthi rebels, killing 10 militants. The president has signed the 28.7 trillion naira 2024 budget into law, assuring Nigerians that the budget will be efficiently implemented and vigorously monitored. The signing took place at a brief ceremony at the presidential villa with senior government officials led by the president, the Senate, Senator Godswill Akpabio, and the Speaker of the House of Representatives, Tajuddin Abbas, present. Speaking after the ceremony, the lawmakers told journalists they will ensure the budget is properly implemented for the benefit of all Nigerians. Our State House correspondent Larry Lasisi reports.
President Bola Tinubu arrives for the signing ceremony of the 2024 appropriation bill in the State House, Abuja. On hand to witness the ceremony are lawmakers led by the President of the Senate and the Speaker of the House of Representatives, some ministers, and other top government officials. After a short ceremony, the President proceeds to sign the bill. The President salutes the work done on the budget by the National Assembly with a priority on reducing the deficit and increasing capital expenditure.
It contains a good increase in the capital side, a reduction in recurrent expenditure, and it brought down the deficit from 6.11% to 3.88%. That, to me, that's an achievement.
He also stressed that the budget will be implemented.
We will implement. I want to assure the Nigerians that all the MDAs and our teams have been warned. MDAs must have regular report of the budgetary performance in the area that we put in place to help ordinary Nigerians. The goal is to promote efficiency, dedication, and accountability. If you cannot do that, you may have to leave us to do the job on your behalf.
For the lawmakers, adequate oversight is necessary for the efficient implementation of the budget. They also applaud the president's action to address the controversies around ways and means.
We will make sure that if there is need, that we also undertake joint monitoring of the implementation of the budget to ensure that, yes, nobody can tell us one thing in the chambers or in the green chambers and another thing in the red chambers. We will make sure that we monitor very well. And he has also assured us that he has passed the matching orders to them. Ours is to make sure that we do our job. Oversight, oversight, oversight.
Landmark achievement we had was also approving the securitization of the ways and means, which has effectively brought to an end these controversial means and ways of borrowing money. And he has assured Nigerians that this will be the last of this kind of ugly incidents.
The uniqueness of the budget is highlighted by the ministers who are confident of adequate funding.
We are spending close to 11.4 trillion as capital expenditure, which is about 39% of the budget itself. I think this is almost the first in a very long time in our history. Equally, Mr. President said it today. One of the things that gave him pleasure was that this budget even provided 100 billion to provide school feeding for children.
We're relying less on borrowing and more on revenue, and I think you have to take the two together. We are very optimistic that not only will this budget be funded adequately, but it will be funded on a timely basis as well.
From all indications, these government officials appear very optimistic about the full implementation of this budget and its impact on Nigerians. From the presidential villa, Lanre Lasisi, Channels Television News.
All right, that's it. It's official. We now have the spending and revenue generation plan for 2024. It's official at this point. And joining us to analyze this is Dr. Muda Yusuf, CEO, CPP, joining us right here in the studio. Great to have you, sir. Happy New Year.
Happy New Year to you,
I believe, and congratulations. We've finally passed the 2024 budget. So now we know what the plan is, the spending plan, where the monies are going to go to, and where we're going to be pulling out, most of those funds from. In your opinion, the president said that this budget is for the people. How do you see it?
Yes, I believe it's for the people.
Yeah.
But, when we talk about the people and talk about the economy, we need to look beyond the budget. Because budget is just about appropriation. It's about spending money. It's about generating revenue. But there is more to an economy than the budget. That is why for those of us in the private sector, sometimes we feel that the policy environment, the macroeconomic environment, the regulatory environment, the structural environment are even more important than the budget itself. Because if you go through what I can call the elementary literature of economics, the key drivers of an economy are: one, government expenditure, which is what this appropriation is all about. Two, investment expenditure, which largely comes from the private sector. Three, consumption, which comes from the people. Consumption is important because if you produce and there is nobody to buy, then you are not in business. So the people must be in a position to buy. That's why consumption is key. And lastly, exports. Export is what you can put out there to the world as part of the wealth you are creating internally and you are selling to the world. So those are the critical drivers of an economy. So the budget is just one component of it. And that is why it is important as you go forward with both the implementation of the budget and the policy management, we should ensure that these other components of the economic drivers are also not jeopardized. I'm talking about private investment, I'm talking about consumption, and I'm talking about exports.
Because as things stand, consumption is affected. There's a cost of living crisis.
Exactly.
At the moment. And the business environment is not even helping.
Exactly.
For businesses. It's making cost of doing business, even higher.
Yeah.
But, looking at 2024, at this time, it's all about generating revenue for the government. They need revenue at this point to be able to make this budget, actually work. And now we've seen the issue of securitization now. That's 7 trillion. We still have the outstanding about 23 trillion that was securitized, last time. What's the implication of this new one?
Well, as it stands now, the current level of debt is about 87 trillion. And it rose to that level because of the securitization of the 23 trillion ways and means. Now that we are adding 7.3 trillion, that's of securitization. Because what securitization means is like normalizing a debt that is owed by government. So you're moving it from the confines of the central bank to the purview of the debt management office, so that it is normalized as proper debt. So we have to add that 7.3 to the existing 87. So we are looking at somewhere close to 95 trillion naira in terms of the debt profile as we speak now. That, of course, is a major challenge.
And this is just, within the first few months of the new government, and definitely we have how many more years to go, but we're already at 7 trillion.
No, the point is that a large number of these are actually legacy debts. Some of these, even this 7.3, a large part of it were part of the exposure that existed before the advent of this administration. So what the administration is trying to do is to clean up the space, especially around this ways and means thing. And given the commitment of the Central Bank of Nigeria, because the governor has said it severally, that he was going to be strictly committed to compliance and he was not going to go beyond or outside what the statutory provision is for ways and means.
It used to be 5%.
It used to be 5%.
It was increased.
It was increased to 15%.
Right.
Just to give some more accommodation for government, which is fair enough. If we're able to keep within that limit, then the risk of these ways and means to the macroeconomic environment will be much reduced.
Well, how does
because part of the things that brought us to this situation, especially all these macroeconomic challenges, inflation, exchange rate, is the ways and means. Because we went far overboard. So if we're able to keep, tap on that for me, I think.
Wouldn't it have been a better plan to even take it below 5%?
No, we have to also be realistic. Because the whole concept of ways and means is like an overdraft. It's not something that should replace the normal revenue stream. Because, you know, the rate at which the revenue comes in may not match the rate at which we are spending. So in order to bridge that gap, that is the essence of the ways and means. It's an overdraft.
But it seems
that is why it has to be redeemed.
We've been putting a lot of attention to it. You know,
yes,
from the past administration.
Yes. No, we depended so much on it, that so much so that it became a major revenue stream. And there was no sufficient disclosure, which made it worse. Now, coming to the point you made about the emphasis on revenue, I think we also need to be very careful so that in the process of chasing revenue, we don't hurt these other components of economic drivers that I talked about. Because some of the agencies of government that have been saddled with revenue generation, not all of them were set up as revenue generating agencies. Now, from what I'm hearing now, practically all the government-owned enterprises have a mandate to go and generate revenue. And if you continue on that trajectory, it's going to hurt investments. It's going to hurt economic growth. I'm not saying that we should not grow revenue, but we should define the boundaries of how we generate the revenue and the role of the institutions of government. Because when I listen to the National Assembly and the way they address some of these government agencies, it seems to me that the only KPI, which is key performance indicator, that the National Assembly is relating to is revenue. Because I heard the Senate President, he repeated it 3 times: revenue, revenue, revenue.
And that has huge implications.
It has huge implications for the economy. Because we are dealing with an investment environment where those who are investing are struggling.
What do you think should be the priority for KPI for these MDAs?
No, the priority depending on what function you have. Some of them are enablers of investments. You know, if you are a regulatory agency for standards or something, you are supposed to support the system to be able to generate standards. If you are an agency to ensure level playing field, to ensure competition, to ensure that there is no abuse of market power,
then you shouldn't have so much business with revenue generation.
You should not have. Perhaps maybe to cover some administrative fees. But when revenue generation becomes an overriding objective for practically all MDAs, we have to worry about that. Because if you are not careful, we'll be hurting the economy. Because the president has said it repeatedly, that he's committed to creating a conducive environment for investors, a good investment climate. And now we are dealing with investors that are struggling with exchange rate depreciation. They are struggling with high energy costs. They are struggling with high trade costs. They are struggling with, even taxation, high interest rates. These are issues that they are already grappling with. They are struggling with even high import duty in some cases.
So going into 2024, now we're in 2024, just about 2 days, we're still fresh at this point.
Exactly.
From what you're seeing, going forward now, what should be the priority, going forward to make sure we have some kind of soft landing for 2024?
Well, the priorities are first to sustain the reforms. Because the reforms that the administration has embarked upon are necessary but very painful reforms. It's good to sustain it. But as we drive the reforms, we need to address the social consequences of reforms. Because if you go around town now, the biggest issues are the social issues, particularly cost of living. So there has to be some deliberate action and steps to bring down the cost of living, particularly the cost of food and the cost of energy. And I listened to the president's speech. he was also very emphatic about those two areas. He spoke about what is being done about agriculture, about the almost 1 million hectares of land that has been acquired in Niger State, in Kano State, and all of that. That is good. But we need to do more. If there is a trade component to ease the problem, let us also look at it. If there are imports that we can liberalize, I'm not saying we should open the floodgate for importation of rice or something, but there are some food processing companies that also rely on a couple of inputs that they import. Let us liberalize that component. Let us relax some fees, some duty and things like that, so that they be in a better position to produce some of these staple foods. So there's also a trade component to easing the pressure on the people. So these are some of the things that we need to deal with.
So much to unpack, much to unpack. We're just about 2 days in.
Of course, obviously.
More to go, and hopefully somehow, we can make this work going forward. Thank you so much for coming on, Dr. Muda Yusuf, CEO, Center for Promotion of Private Enterprises. Thank you so much.
Thank you very much, Larry. Thank you.
All right, we'll take a break now. Next, commodities market update. We get an outlook for how the economy in 2024 will impact commodity prices in Nigeria. To stay with us. Welcome back. Well, let's get a sense of what to expect for the Nigerian economy in 2024 and the impact for commodity prices. Joining us now is Mr. Bismarck Rouhani, CEO of Financial Derivatives Company. Happy New Year. Great to have you, sir.
Happy New Year to our viewers, and good to be here.
Fantastic. So I would like you to, look into your economic crystal ball at this time. What do you see coming in 2024?
Yes, we shared this with your viewers on the last day of 2023. We see what we call an uncertain future. I was listening to Muda just now in a few minutes on talking about the various factors that need to be considered in implementing a budget. But 2024 is more than a budget as far as we're concerned. First and foremost, let us look at what we see or what happened in 2023. In all, there are 9 indicators, major indicators that we looked at. Of these, 5 were negative and 4 were positive. The positive indicators were GDP growth, which went up from 3.25 to 2.45. Income per capita, in fact, these are negative actually. Income per capita dropped from $2,200 to $1,753. And we had inflation increase from 21.34 to almost 29%. The exchange rate fell from 740 naira to $1 to about 1,225, now about 1,215. Oil production increased marginally by 11% to 1.34. And our external reserves, gross external reserves, actually declined from $37 billion to $32 billion. But when you talk about the encumbrances, you find that the reserves are actually much lower than that. Quite frankly, we do not know what the exact reserves level are. External debt is about $41 billion and actually went down from 41.69 to 41.59. But those are contractual debt. If you add the non-contractual debts, our total external debt position is more in the region of $85 billion. So if we are going to be talking about rescheduling our debt, we have to reschedule both our Paris Club, our London Club, and other Eurobond indicators. So debt rescheduling is one of the issues we will talk about in a few minutes. He said that the number of Nigerian students who passed WAEC, English and Maths were 64% in 2022 and have now increased to 79%, which means that maybe things are getting better, or either that or people are actually forging the results. The national grid collapsed 12 times in 2022, so far recorded 3 times, but most of the 3 times were mainly in this part of the year. So what does this actually mean? A mixed implication for Nigerian stakeholders. Who are the major stakeholders? Number 1 is the government. The government has got a lot more revenue than they were getting before. So from an average of about 700, 800 billion naira 2022, they are now getting about almost 1.7, 1.8 trillion naira. So maybe about almost 100%, depending on what average you use. So that the government, both state and federal, are getting much more money. How do you convert this revenue of government into, how do you optimize it? That's the word. How do you optimize this revenue so that it can have an impact on people? It's not just numerics, it's about welfare, it's about happiness, it's about social indicators, right? So that's number one. Number two are the consumers. The consumers, to all intents and purposes, are being chiseled because basically you have taken money from them, direct money from them, indirect taxes, right? Benefit approach. You're using all of these things. So we can see that in all, if you look at the monies that are being talked about, we've taken out from them something like almost 2 or 3 trillion naira in terms of subsidy, electricity, and all that. And what we have put back so far in palliative is about 651 billion naira. So you can see that what has come out from the consumer pockets is far in excess of what the government is putting back in. And for what the government is putting back in, because of its inefficiency, there are major leakages. So even if the government says they're putting 651 billion naira back into the system in the first few months, what actually gets to the people is actually less than half of that.
Right.
Because remember when we had NSAS, all the palliatives were in the warehouses, and the warehouses belong to the wives of governors and all of that. So that we know what that means. Now, finally, investors and markets. The investors are tentative, while the markets are happy that these policies have been. And then we've seen the stock market actually outperform the rate of inflation, and they're giving you about almost 45%. That's it. Now, there's small gains and more pain to come. Ladi, I don't know if you want to stop there before we take on the next question you have.
Right. All right. Mr. Ronnie, at this point, we know the headwinds are quite humongous at this time. Yeah. But going into 2024, what would you say could serve as tailwinds for the Nigerian economy?
Well, before I go into 2024, I want to actually break down and let you and viewers know exactly what happened to their prices. So that's the first thing. When you break down the inflation basket, and the inflation basket was last reconstituted in 2009. It's supposed to be reconstituted every 5 years. So we are due for twice, 2009 to 2009 to 2014, and then again and again. So there are about 3 times we have not reconstituted the basket. But having said that, we can see that the major issues that we face, particularly in rice, you can see rice has gone up from 47,000 to 70,000. Beans has gone up from 36,000 to 42,000, 16% increase. Flour gone from 34,000 to 46,000, 35% increase. Tomatoes has gone up by 13% to 25,000. And bread has gone up from 700 to 1,200. Now, what has this led to? It has led to something which is quite consequential, and Daddy, we spoke about this some time ago last year. I begin to see a lot of people break down mentally. So the number of mad people, even just empirically and anecdotally, you'll see that the number of people that are losing it are more than the number of people that, we are seeing that great increase. The Federal Neuropsychiatric Hospital in Yaba has recorded 100% increase in people that are arrested that are coming. And these are not people that are being arrested for, dangerous behavior, but these are just people that have voluntarily come to say something is wrong. So that's one of the things. Now, there'll be more pains in the first half, and before the gains begin to come in the second half of the year. Why do we say this? We believe that in the first half of the year, maybe this month, at the end of this month, the MPC will have to meet. MPC will have to meet, and we expect a tightening of interest rates of at least 100 basis points from where it is today, right? That is required. But at the same time, there's a contradiction, because you could see that some federal government agencies are talking about lower interest rates, intervention rates, and all sorts of things. You can't make omelette without breaking eggs, and I said that on the program at the beginning of the year, that you need to understand that if inflation is at 30%, food inflation is at 32%, you need to intervene to reduce money supply saturation. You need to increase interest rates, and you need to make the economy much more productive. This is about productivity. It's not just about interest rates. Interest rates being increasing will not necessarily increase productivity. It's how you utilize the resources, how you optimize the resources, how you collaborate between the state, federal government, the government, and the private sector. How you increase the incentives, right, rather than what you see today. And I'll give you an example. The Bagada to Apapa highway. We could have been talking about this with and arresting ministers and giving them EFCC, but awarding that contract in a project for tax swap to the Dangote group. That road, there are no stories. Once you get to Bagada, you know you have 10, 15 minutes to the airport. No stories. The same thing is happening. The MTN is doing the same thing between Onitsha and Enugu. That way, we are beginning to see productivity gains. Because when it used to take you 4 or 5 hours to go to the airport, it now takes you 15, 20 minutes. Those are productivity gains. So how is this going to happen? First half of this year, tight monetary policy. I think bank recapitalization program will be announced. IMF, we will have to start talking to the IMF for a policy support program. We will have to establish what our debt is, and before we think of rescheduling and restructuring it. There will be fiscal consolidation because we are able to revenue. Revenue is not going to solve the problem. Increased revenue is important, but you fund development projects by partnership between private and public sector.
Right.
By borrowing project finance and using the revenues that come in future to amortize it over time. So that is the thing. If you think you are going to raise revenue to fund all the building of the roads, building of bridges, building of power stations, it's not going to work. It's not going to work. So you have what we call revenue anticipation bonds, which are done. Now, if this happens, in the first half of 2024, we think that we can get GDP growth of 3.5%. We think that inflation will rise to about 30% before tapering. And we think the exchange rate will go as far as almost 1,300 in the parallel market. Then in the second half, what happens? Second half, we think that the full operation of the Dangote refinery, the rebasing of the GDP, reconstitution of the inflation basket, the adoption of a wholesale foreign exchange auction,
right, which will
bring about efficient use of the get us an efficient exchange rate. We begin to see the exchange rate begin to appreciate more towards 900, 950 from the 1,300 we're talking about. And this will happen in the second half after you started talks on the rescheduling. You have issued, you have an IMF program.
Right.
And GDP begins to go to 3.7%. That's what we see.
Okay. Well,
the comment?
Yeah, so much definitely to unpack there, Mr. Ronnie. But at the end of the day, I guess we'll see how the policy direction is going to impact the economy. Hopefully, we get some kind of soft or mid-soft landing. Going.
You will get some soft landing, Ladi, but the soft landing will come after you've done the heavy lifting in the first half. If you do nothing in the first half, then there will be no soft landing. As a matter of fact, there will be the economy crashes.
Ouch. Thank you so much, Mr. Ronnie, for giving us this outlook into 2024. Mr. Bismarck Ronnie, CEO of Financial Derivatives Company. Thank you for coming on, and Happy New Year again.
Same to you guys. Thank you.
All right, now, so it's the first trading day of 2024. Let's get a sense of what's happening now. Willie Bong joins us right here. Great to have you, Will.
Hi, Ladi.
For the first day. Congratulations.
Yeah,
welcome.
Very fantastic first trading day. Let's kick off with African markets and see how they traded at intraday. Coming on mostly strong at intraday. The first trading day for 2024. NGX is in positive territory. It's up 0.29% and nearing the 75,000 level just very quickly. And we probably hit that at the close of the bell. Fingers crossed. Now let's look at South Africa's GSE. It's Not off to a good start this year, down more than 1% at intraday. But we'll watch and see how tomorrow is for that exchange. Now let's look at Egypt and see how they performed at intraday. The EGX30 is riding on its 2023 high and kicking off 2024 with a bang. It's up 1.24% at intraday, back to the 25,000 level. And now let's look at Kenya. The Nairobi Securities Exchange closed Friday, December 29, 2023 in the green. But let's see how trading, kicks off for that exchange for 2024. We'll keep our eyes peeled for that. And let's move over to what's happening at the NGX. Why the NGX starts off in the green? At intraday, we're seeing it trading at 0.29%. We're bringing in Ambrose Omodion as the Chief Research Officer, Invest Data Consulting, to give us insights as to what's driving stocks and investor sentiments at the open first trading day of 2024. Good afternoon, Ambrose. Good to have you on the program.
Yeah, thanks for having me.
Ambrose, we're seeing the market opening strong, good one, but we're seeing some stocks that have been driving it. We see Boa Cement, Transco, ICO moving the market. What are investors seeing at the moment for this stock?
Actually, there's still a very positive sentiment for the market from the investors' perspective. So I would tell investors that this is not the first year we're seeing that the Nigerian market is opening positive on the first trading day. For me, the year 2024 is coming with a lot of challenges, expectation, and opportunity. So it's now done on investors to know how to go about their investing in 2024. Yes, as you mentioned, some stocks have opened with 10% maximum gain today. Where are they heading? As investor, is it time for you to do your portfolio reshuffling or rebalancing, or you going to position for dividend income is ahead in terms of any season? Because I tell you that by next week, we start seeing a audited account from some quoted companies that had December at year end. It's in the market. Those numbers are going to guide you to make a position. Or we have seen that quarterly performance before now. Are these people pointing towards good dividend at the end of the day? For me, the market has opened on a good note, good is expected, and as well also activate in invest data. But one thing is very sure, that 2024 is coming with a lot of volatility, or we'll call it oscillation in technical analysis. It will come. For you as an investor, don't be carried away with an up market, because I believe that this trend will be sustained as market is ready to break out another technical line of 75,000 mark very soon. If it crosses it and not to sustain it, that means the earning season also will be a plus. But another thing is that this is the first time we expect to see MPC meeting within this period. And any season also within this period. What will shape the market is the outcome of the MPC meeting and also the strength of the strength of the numbers we're expecting. Because a lot of activity between this first quarter will shape where the market is. But that is why any investor or trader in the market wants to make a good target, take the profit, because a lot of factors will shape the market this first quarter of the year.
So just very quickly, Boa Cement is up at intraday. It's opened 96 Naira. Currently trading at about 105 Naira. And we also know that he made that the CEO of Boa Group, the chairman of Boa Group, did say that he was going to slash the price of a bag of cement from about 5,500 Naira to 3,500 Naira starting January 2024. How is that impacting on the investor sentiment in terms of, are they willing to still buy cement? Why is the price going up? Do they think they're going to make more profits? Or I think it's on the other side of it. On the flip side, they're going to have more sales, but is that going to guarantee profits?
Yeah, for me, I would say that the movement you are seeing, Boa Cement, is just market sentiment. I call it a market forces. Let me use that language. Because before now, we know that the movement of Boa Cement price on the estate is not because of investors' demand. That been because of the shareholding structure, where majority of the share is still within the major shareholder in that company. But that the movement for me is not attractive to me, because I believe that even as we just mentioned, reducing your price of cement is good. You might have volume of sales. At the end of the day, what's the cost of production? They're going to turn to a better profit that will support the number at the end of the year. That means for me, investors will also think twice if they are the one putting the market. But I believe that for not the first time, we know that the movement of that stock has never been as a result of market activity. Really, it's just a result of a movement between the major shareholders there. For me, I'm not surprised that I see the clock gaining this morning.
Okay, thank you so much, Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for your insights and perspective this year. So let's look at the other major equities. Let's turn to the Middle East and see how they kicked off 2024. I think they started with mixed sentiment. We see Abu Dhabi down at intraday 0.06%, Dubai, however, on the flip side, in the green 0.09%. Let's look at other parts of the GCC region. Saudi and Qatari indexes trading in opposite directions, 0.19% up for Saudi, and Qatar index down more than 1%. Asia Pacific market, I can tell you, we're mixed in the first trading of 2024 with China stocks dipping, and that's because of the China's manufacturing PMI contracting further in December. That's a sign that the policy support for that country needs a bit more reviving. They need that to survive and sustain the economy. And the analysts say that China's stocks may see the worst start to the year since 2019 following this economic woes. So,
right.
Ladi,
I guess investors will be itching at this point, seeing if they can make the same kind of gains they made in 2023 in 2024.
Let's see how the dip works for investors.
Fantastic. Thank you so much, Will, giving us the details there from the global market. Let's get a check on what's happening in London now. Juliana joins us from our London studio. Last time I saw Juliana was last year. Great to have you, Juliana. We have some data out now. UK food inflation cools in December. How is that possible with all the festivity spending?
Good afternoon, Laddie, and Happy New Year to you and to the rest of the crew. You're absolutely right. We have had some positive data to start the new trading week of the new year, and this is from the British Retail Consortium, showing that supermarket inflation has dipped. It's dipped to an 18-month low in December 2023 from 7.8% in November to 6.7% in December. And of course, it goes without saying how important this is, because one of the reasons why inflation was so staggeringly high over the past couple of years in this country is because of grocery prices. I think lots of people were finding it, of course, unsustainable. One of the reasons why we've had, large swathes of industrial action across this country is because junior doctors and teachers were having to use food banks because they just couldn't afford the food. So this is a good thing. A lot of this has got to do with the festive period. We know that the German discounters, Lidl and Aldi, are slowly getting in on the market share from the big four supermarkets. In fact, this morning, alongside the data from the British Retail Consortium, we did have record-breaking data from Aldi and Lidl looking at their 4-week sales up until Christmas Eve, and they've both done exceptionally well. Year on year, Lidl's sales are up 12%. Aldi, they've had sales of over 1.5 billion pounds, shall I say, across the UK for the first time. So it's good, and it does show that perhaps there is more competition amongst grocers, which of course is trickling down to consumers. There is a caveat, and that is some economists do believe that perhaps we could be in for a hike in grocery sales in the coming months. At the end of this year, there are new Brexit import tariff checks on the border. This is going to be for fresh and live animals, so that's not going to be great. I believe there are only health certificates expected at the end of this month, but when it comes to April, there are going to be actual physical checks. So not great, but alas, let's kind of bathe in this glory at the moment, and the fact that grocery sales are down, grocery prices are down.
Right, quite interesting, and definitely we're looking out for the January. Definitely, it might go down even more at this point. But let's get a check on this trading day now in UK. How's it looking? Is it starting off in the green like we see here in Nigeria?
Unfortunately not, very much in the red at intraday. We did have some data from S&P Global, which provides a forensic look at key sectors in the UK economy, manufacturing, construction and services. Unfortunately, for the 17th month in a row, manufacturing has dipped, and this is across all swathes. So new orders, output, employment, purchases, supplier delivery time, they are all on the decline. decline, not great, come in at 46.2 in December. Of course, anything when it comes to PMI data, anything below 50 reflects a contraction. So not great as we start off the new trading week, which has obviously been reflected at intraday. The all share is down. It's down 0.06%. The FTSE 100 up slightly, though, by 0.01%, but the FTSE 250, the domestic market, Laddie, that's down by 0.27%. In the currencies market, the British pound is currently trading down against the US dollar by 0.15%. Trading up, though, against the euro by 0.16%, and the British pound is trading up against the Japanese yen at intraday by 0.21%, Laddie.
All right, I guess we'll be looking out for the close today. Thank you so much, Juliana, for the update. And Happy New Year again. All right, let's get a check on Europe now. We'll see a lot of people were apprehended in Berlin on New Year's Eve as travelers enthusiastically unleashed fireworks subject to stringent regulations in Germany. Let's get a sense of how this impacted the New Year fun right there in Germany. We turn to DW's Wada Imra, have joined us from Berlin. So, Wada, I guess these people were not allowed the joy of fireworks.
Thanks for having me, Laddie. Yes, Berlin police arrested 390 people on New Year's Eve and are looking into hundreds of criminal violations. These arrests were primarily because of dangerous use of fireworks or using fireworks in a way that ended up injuring police officers or others. Despite this, the Berlin police say that this year was largely successful in warding off unrest or clashes. The law enforcement was so concerned that they imposed a state of emergency from 7 p.m. on December 31st. This meant that around 4,500 police people from Berlin and other states came for this major operation to keep the capital safe.
And what are the restrictions on using fireworks?
Well, this is interesting because if you ever visit Berlin on New Year's, you would think that Germans or residents of Germany are perhaps some of the biggest fans of fireworks. Let me tell you. So last week, I was on my way to work at 6 a.m. and it was still dark. When I walked past a supermarket, there was a huge queue that early in the morning. I asked around, and it was because people, kids, families, were waiting to buy fireworks. And you can tell this because during the last 3 or 4 days of the year, people here can freely buy fireworks to only use them on New Year's. Otherwise, Germany is quite strict. There are categories of fireworks, and the smallest one, like sparklers or poppers that children use, are widely regarded as safe. But the more sophisticated or strong fireworks, the harder it becomes to purchase them. The mid-size or bigger fireworks can only be set off on December 31st and January 1st and are totally prohibited at other times.
Yeah, very, very strict regulation there. But let's turn to the markets now. First trading day in Europe, how's it looking?
Well, Asian shares started the first trading day of the year, and it seemed to look good. Investors are slowly returning from the holiday mood. And because the year 2023 ended with strong global shares, risk appetite is also strong. There is a lot of talk about China because the last released official data shows slowing manufacturing activity, which paints a rather gloomy outlook for the world's second largest economy. Bitcoin continues to rise, but today some European and Eurozone data is expected to come out, which can likely sway the markets.
Right, thank you so much there for giving us the details from Europe. Definitely, we see Bitcoin truly, that's in the green this morning, as she said, that was Wada Imran. And if you look at the headlines in the crypto market today, we see Bitcoin miners have achieved an unprecedented success with a monthly revenue of $1.51 billion. Those are the people that actually mine some of the Bitcoins that you see in the market at this time. We see that they've gotten a big revenue there, showing that the price action we've seen with Bitcoin has impacted how much they get. That's talking about the miners. You know, Bitcoin is gotten by some of these miners solving some complex mathematical problems there, and they get some Bitcoin rewards for that. Orbit Bridge hacked for $82 million. That's a gift, New Year gift given to that exchange there. They were hacked for $82 million. The owners are yet to comment on the matter yet, but hopefully some of these these users can get some of those funds back. And Bitcoin ETF approval is inching closer as SEC readies for final decision dates. All investors in the crypto market looking for that Bitcoin spot ETF. We'll see if it's going to happen sometime in January, and definitely we know that's going to impact the prices going forward. Let's get a check on the sentiment in the market now. And the crypto market, we see it's still a very greedy market with Bitcoin up 6.25%, big jump. We're seeing there Ethereum $2,400, 3.98%. We're seeing green on the screen starting right here. We know this market doesn't close, so it's just another day right now in the crypto market. Cardano 62 cents. 3.9%. Let's bring in Element Damble now. Join us via Zoom. Great to have you, Element. Happy New Year.
Hey, Lottie. Happy New Year. Good to have you as always.
Fantastic. So we're seeing green on the screen this morning. What are the charts telling you about Bitcoin price action for 2024?
I think for 2024, it looks relatively bullish. For now, I would say in the mid to short term, it does look like there is potentially a push to around 47, 48K. I know your viewers and listeners would potentially want me to say 50K, but it does look like that might come a little later on. It does look like in the next few weeks, even potentially this week with all of the news happening, we could see Bitcoin heading towards around 48K. But on the longer term, looking at Q2, Q3 does look relatively bullish for Bitcoin.
Right, and what do you think could be the top, at this point? Most times, Mr. Market gives you all of those gains, but somehow can just take it back. What are you seeing for the top?
In terms of, an outlook for 2024?
Right, yeah. What do you see the top at?
I think I can definitely see Bitcoin, reaching a new all-time high. So I can see, let's say, 70K. To be honest, as early as Q2, I can see 70K. I think thereafter, that's when it becomes speculation, because traditionally, when you do see markets reach new highs, you do have a degree of consolidation. So a new all-time high for sure, and if it potentially pushes that by, let's say, 5 to 10. 80K, I think that would be a good year for Bitcoin.
Right, and definitely getting to that kind of price level or those new highs. It's not a straight road, There's going to be ups and downs and all of that. But what are you seeing as crucial support in the short term?
In terms of the support, I think the last time I was on, I kind of touched on this. I do believe around 37, between the range where we're at now, to be honest, and have been for the last few months, between 37 and 47K seems to be the current support and resistance. So I've just pivoted to a monthly chart, actually. So if it does truly break that 47 level, that's when I believe you are going to see the historical trends of bullish activity start to repeat itself. Straight to 70K from there.
Right. So Element is seeing some kind of 47K level short term. But remember, this is not financial advice, so definitely it might happen. Thank you so much, Element Damble, for coming on today.
Hello, Lottie, can you hear me? I think I lost you there for a sec.
Oh, no, I could hear you. So, yeah, we got your short-term forecast there, 47K for Bitcoin. If it breaks that level, then we might see new highs. Thank you so much for coming on, Element.
Thank you as always. Thank you for having me. Happy New Year.
Fantastic. Happy New Year. So let's see the top gainers now this morning. Let's see who's topping the charts for the early trade we're seeing today. We're seeing some bullish sentiment there. Double-digit gains, 18.53% for Astra there. ASTR, 16 cents. Near Protocol, that's been on a bullish run for a while now. It's up 17.86%. So we're seeing double-digit gains. Let's see the top losers this morning. Even though it's a bullish market, we're still seeing some pullbacks. BSV, 8.95%. Helium, that had a bullish run recently, down there, $6.78, down 5.65%. We see XDC and MakerDAO, $1,651, having some pullback. So it's still a very bullish market this morning, kicking off 2024. We'll see how it all plays out. So that's the show today. You can visit www.channelstv.com for more updates. Lottie Williams from me and the team right here at Channels HQ. It's bye for now.